I call this the double dip dividend strategy, where I'm able to manufacture a dividend every single month along with getting paid a monthly dividend from a stock. And most retail investors have no idea this strategy even exists. So if you're running covered calls right now, you're definitely going to want to watch this video, and especially if you're an option seller as well, to get that double dip income coming in. And if you drop a comment down below, I'm going to give you my 10 favorite dividend paying stocks to run this strategy on. And hit that like button, that subscribe button, guys. And of course, I hope you're having a God-blessed day. Let's go over the shoulder, guys. So first and foremost, I don't want to waste your time. The strategy involves running the wheel strategy on dividend-paying stocks, but not just running the wheel strategy, running covered calls. So if you don't know what that means, basically, I'm saying I'm willing to sell 100 shares of a stock at a price and date that I choose. So for our example, and you'll see why here in a moment, with Realty Income, one of my favorite dividend-paying stocks because it's paid out monthly, right? So let's say I have 100 shares of Realty Income and I go to sell a call, and I can actually select my date here. Now, usually with like Realty Income, I'm doing what I can get. You kind of have to time these a little bit better. But for example, in this case, I would just go, let's say 49 days away. 21 is just a little too short, so the premiums aren't going to be as nice. And all I'm saying here is I'm willing to sell my 100 shares of Realty Income on December 19th. Okay, that's all I'm saying. And I get to name my price here as well. Now, with stocks like this, unfortunately, you do have to typically play a lot closer to the money to make it worth your while, but it depends on your strategy. So for example, if it's 50 or for 60, right, if I say I'm willing to sell my shares for $60, I would collect, right, $50. The bid ask is 50, so I collect about $55. Let's just say $50 of premium. Now, if I go to my cash secured or my covered call calculator, all my calculators are free, guys. Second link in the description. I give them at the end of my Ark Options workshop, which I know you will find extremely valuable. Now, with that said, let's just say I'm collecting $50 of premium. My strike of the option, I'm saying I'm willing to sell my shares for, is 60, right? And my Realty Income shares, let's just say we own them at a cost basis of $57. This will all make sense here in just a moment, so bear with me, right? So what does this look like? Well, number one, we're getting just about a 1% return in a 49-day period, right? Not the best. We kind of usually want to time these so they're hitting around that 30-day mark. But we also, if we end up selling our shares, we get an extra $300 of profit. Now, on top of that, right, we are actually collecting the dividend, the monthly dividend payment that we're getting from Realty Income. Now, if we go back to this options chain, I want to quickly talk about the risks, right? Now, number one, right, if on the 19th at close, Realty Income is trading at below 60, let's say it's trading at like 57, 58, 59, your shares aren't sold, and your shares are returned back to you to then run the play again for the following month, collect more premium, rinse and repeat, collecting dividend, collecting premium on a monthly basis, double dip, right? So the second thing that can happen, and this is the biggest risk, is that let's say at the 19th at close, Realty Income is trading at $65. Well, guess what? You selling your shares at 60, fam. Now, is that a bad thing? Is that a good thing? You know, there's strategies for rolling that position out a little bit more to kick that can down the road to the inevitable sale. But with that said, that's not the point of today's video. Dive into the other content on the channel, and especially the Ark Options workshop to really learn more about that. But with that said, the way we can kind of gauge our probability of assignment is looking at this delta number. This being a 0.27, let's just say 30% chance that I will have to sell my shares, or a 70% chance that I will not have to sell my shares. That's the way I like to look at it. Now, part of this game is there's going to be times where you get assigned, and there's going to be times that you don't get assigned. That's why when you're doing this with like a Realty Income, you kind of have to think through your own strategy. Now, if I say I'm willing to sell them for $57.50, right, that's real close to the money, right? That's at 50 right there, right? But look at how much more premium I'm collecting here. I'm collecting over $120 between the bid-ask spread. Let's just say 120, the bid, just to keep it simple, $120 of premium. Now, if we go back to my covered call calculator here, right, you could see that jumps me up to a 2% return, or ROI on collateral return. How am I getting that number? It's simply the 120 divided by $5,700, right? Because we said, for the sake of this educational example, $57 a share times 100. All options contracts are equal. One options contract is equal to the 100 shares. That's the way it is. But in this case, if you look, your delta here is what? Actually, it's already 57. It just crossed 57.50 live. So it's a 50-50 shot, essentially, that you would actually get assigned your shares there, okay? So why do I like doing this on dividend paying stocks, specifically like Realty Income? Well, Realty Income pays their dividend out monthly. That means that you're collecting this covered call premium while at the same time, you're also collecting the monthly dividend from Realty Income as well. Now, one of my favorite things to do with the whole Ark Options strategy is to also do this on Dividend Kings and Dividend Aristocrats. If you've been following me on this channel at all, you guys already know I like to kind of play it safe. And some of my other favorite Ark Option Strategy stocks to collect the double dip dividend from covered call premiums, as well as that dividend paying stocks, are Dividend Kings and Dividend Aristocrats. Here's just some. AbbVie is one of my absolute favorite stocks, and I'm actually monitoring AbbVie right now because we just had earnings here and it's down about 4.5% today. And I'm continuing to monitor this one closely because I want to get into some puts. Now, looking at the chart here, I have my Bollinger Bands lined up here, and you can see we are right at that bottom Bollinger Band. That is going to be a key support level right now that I'm monitoring to see if we kind of get a little bit further and closer to the 200 and 300 day moving averages. But even so, let's go take a look, right? Now, this is a proper setup in my personal opinion. Obviously, I'm not a financial advisor. This is all for educational purposes only. But we usually like to sell our puts on companies when we're at this bottom Bollinger Band area. Why? Because historically, when we look, we hit the top Bollinger Band and we retract. We hit the bottom Bollinger Band and we retract upwards. And it's been a minute, fam, since we've seen AbbVie at its bottom Bollinger Band like this. And it's a great company with a great dividend of about just 3% a year. Now, obviously, we're not collecting that one monthly. I would say Realty Income, if you're looking for monthly double dip cover call premiums, I would say Realty Income is going to be your best bet. So go make sure, obviously, go do your research here for yourself. But if I go look at the puts on AbbVie, now this is a little bit different. This is where we actually want to buy 100 shares of AbbVie, right? Not sell 100 shares of AbbVie, right? Because, for example, like I said, at the bottom of the Bollinger Band, that's where you're going to get the best premium and best strike price and most least chance of assignment. Now, obviously, technicals don't mean crap. Literally nobody knows what a stock is going to do, but it sets us up for the most chance of success, meaning that we bounce off this bottom Bollinger Band and kind of stabilize somewhere in the middle or back towards the top. Obviously, we don't know what's going to happen. So here, all I'm saying is I'll go 35 days out on this one. I'm willing to buy 100 shares of AbbVie on December 5th at close, okay? Now, I get to name my price here as well, right? So, for example, right, if I look at the 215s, right, AbbVie's trading at 218 right now. If I'm comfortable owning it at 215, right, the delta is about a 0.40, 0.38. Let's just say 40% chance of assignment, 60% chance of not, right? But look at, we're obviously collecting a tremendous more premium. We're collecting $370. But remember, with a cash secured put, your collateral is not your shares now. Your collateral is your actual cash. So me saying that I'm willing to buy it for $215, my brokerage is going to lock up $21,500 for this trade. Is that worth it? Is it not? That's a decision you're going to need to make. But I always personally go look into my cash secured put calculator. Again, all my calculators are free in the second link of this video. So go take a look down there. But if I look at here, I got my 370 that I'm collecting here. It's obviously moving. So 350 now. We'll just say 350 for the sake of this example. 350 we're collecting of premium that is given you up front, and we're collecting $21,500 of premium, right? Now we're getting a 1.63% return on our collateral. That's the premium divided by the collateral. That's how much our money is essentially working for us. Now, obviously, results vary. You obviously see the markets open. This number is constantly changing. What are the risks with this play? Well, let's say on the 5th, right, in 35 days from now, AbbVie's trading, at, 219, 220, 230. Well, your money is returned back to you. You don't actually have to buy the shares, which is a good thing or a bad thing. To me, it's not a bad thing to buy the shares, guys, because if you're sticking to good companies, right, like, for me, Dividend Kings, Dividend Aristocrats, S&P 500 stuff, like, I'm usually not too worried about them, right? But obviously, you have to build your own high conviction watch list. But with that said, for 215 right here, I am actually collecting, or if it's above 215 at the close, I'm not going to buy. I'm not buying the shares. But the biggest risk is, let's say on the 5th at close, AbbVie's trading at like $200. Well, guess what? You're buying your shares for $250. Your money's not going to be returned back to you. Instead, you're going to be given 100 shares of AbbVie at 215, and that's when we can flip the script and sell calls. Right now, we have an asset, 100 shares of a company that pays us a dividend as well, that now we can run covered calls on every single month. So we just flip the script from sell put to now sell a call. And you want to, me personally, what I like to do with my option selling is I'm doing both constantly, right? I'm selling calls on stocks above my cost basis, right? And then I'm selling puts on stocks I want to buy that are below my cost basis, right? It's my way of dollar cost averaging. Now, this isn't meant to be necessarily a replacement to your traditional buy and hold investing. I do believe everybody should have a buy and hold portfolio. I have one. I have a video on this channel of my 5 Vanguard funds that I like to invest in every single Monday, plus some stuff in high yield savings accounts, some stuff in treasury bills. I do think all of those things are extremely important, but any extra income I at least get, I'm usually devoting to selling options, because I treat this like a business. And my point of this business, right, with no headaches or anything like that, which is fantastic, right, is I get to generate income. And one of my strategies and goals, and a lot of people in our private community are retired doing this strategy to generate extra income for themselves. And that is my plan as well. And that's why I started this channel, because I want to surround myself with cool people like that. So if you want all of my calculators here completely for free and learn about the Ark Options Strategy, click that second link in the description of today's video. You're going to get a 2-hour training on this entire thing and how you can set this up for yourself. I'm going to teach you how to use it, and I'm going to give you all this stuff for free. Again, click that second link in the description of today's video. Guys, remember, sell options, collect premiums, repeat. I'll see y'all tomorrow.